Good evening, everyone. Welcome to closing comments here on February 3rd. Let's jump right into our charts and see what happened in the markets today. First up, we got our April live cattle on the board. Did see a really nice push here in this live cattle market here today. This market took a little bit of time to get started going today, but after coming back and finding some good support near that prior day's opening range, we did see the buyers really step in and get aggressive down there between 38 and 39, showing good support before driving this market higher into the close. Finishing the day up there at new yearly highs, printing at 241.80 today, finishing just below that into the close. At the moment, we did see the bulls clear a lot of this overhead inventory we've been dealing with for the last couple of weeks, and a nice strong close up there at new yearly highs will have this uptrend really moving up towards that target one at that overhead gap. As the bulls saw some good momentum here late today, we should see that carry over into tomorrow's session. Look for the upside to continue driving this market higher. We should see this thing printing up there towards 247, try and fill that overhead gap. And from there, we are just knocking on the door, new all-time high. So look for this live cattle market to keep on pushing higher. Bulls are in control here, and we should see the upside continue. Next up, March feeders also seeing some nice gains here today. A little bit tighter action, tighter range as this market did trade inside that prior day's range. However, we did see good support coming in down there near 365 today. Good buyer support down there between 65 and 66, really driving this market back up towards that prior day's high. At the moment, we do have some equal highs between yesterday and today's action, and also last Thursday's action as well, kind of putting some pressure here on this 368 to 368.5 level. We should see that momentum from late today's action carry over into tomorrow's session. We are just right here below this overhead gap. Look for 370 to trade tomorrow, and the bulls to start chewing through this overhead gap. Only about $10 off of those all-time highs, so we should see that come sooner than later. Good relative strength here in this feeder market. We should see the upside continue, and this cattle market is going to be knocking on the door of those new all-time highs here in a hurry. So look for the upside to continue here in both feeder and fat markets. Here in the March corn futures, we did see a little bit of upside today. Bears giving back all of yesterday's losses. Prices did break down below that bear pivot yesterday, pushing down there briefly below 4.25. Today's action rallying back up into it. We still have plenty of resistance up here overhead between 430 and 435, so we don't expect to see the bulls really drive this market higher at the moment. We should see good resistance up here as these moving averages are coming down into price. We still have that above us here at the moment. As long as we're trading below 435, this market is still in bearish territory, and we should see those bears try and drive this market back down there towards the contract lows. Might just take a little bit more time and pick up a few more sellers up here before we get that move underway. But we still have a nice downtrend shaping up here in this corn market, and we should see the bears get aggressive up here and start to turn this market lower soon. Next up, crude oil market finding good support down there at that 20-day average today. This is exactly what we wanted to see as a bull in this market. This thing has just been going to level. We did briefly probe it, but finding that support down there at the 20-day average was able to rally this market back up here above that 200 and our pivot line here at 62.36. Look for this upside to continue back up here towards the top end of this prior range we had back in August and September last year. This 66.5 to 62.5 area is where we're going to be expecting to play this market. We do have some good upside potential, and the bulls continue to show good support in all the right spots, so a potential uptrend could be underway. But at the moment, we just want to continue to play this thing level to level here until we can see how it reacts up here back at 66.5. Back above that, should see this market cruising back up there towards the $70 mark. So look for this market to try and come back up here and retest these right range highs at 66.5. In the meantime, expect to see this thing just keep on chopping up and bouncing level to level in this crude market. Equity markets continuing to see some volatility. Prices really not going anywhere, but continuing to trade in some wide ranges. We did see a little over 2% loss in the NASDAQ briefly at one point today before coming up off of the lows. Still finishing down there in the NASDAQ below that 50-day moving average. It's been a pretty choppy session so far this year. Market continuing to chop around both ends of this yearly opening range. So NASDAQ continues to be a sticky spot. Tech sector is still seeing some mixed results. Dow continues to be where the relative strength is. However, we still can't get back up to those new all-time highs. Showing good support down here near that yearly opening range each time we get down to 48.5. 50-day average holding price here. We did see today's action with a little bit of volatility, but coming back and finishing just slightly negative on the Dow. S&P just kind of been stuck in the middle. Pretty choppy action here as well. Until this market breaks below these new yearly or the current year's low, there really isn't much to be doing here. We are just knocking on the door of all-time highs still, and so we should see this choppy action continue until we can get more participation in that tech sector. In the meantime, we still expect to see this be a pretty selective environment. There are some good sectors to be involved in that are still giving good gains, but at the moment, these indexes continue to be pretty choppy and not really in a hurry to go anywhere. We expect to see that choppy action continue. If we do start to trade down here below the new year or the current year's low, we could see some downside come from there. But in the meantime, just expect these choppy conditions to continue and wait and see how this market is able to find a little bit more participation, see what happens over the next couple weeks, and need to get a breakout beyond either these the current all-time highs and the current year's low. That'll be the deciding point. In the meantime, we should see some choppy action continue here in these indexes. That's all we got for tonight. Thank you everyone for tuning in. We'll catch you tomorrow.